With us, we are now joined by Mike Tonkin. He's a portfolio manager at Old Mutual Wealth, and he's with us at our Cape Town studios. Mike, thanks for your time. Just to pick up on the sell-off that we saw in the global markets, particularly in the biotech sector, what's been the main drivers behind that, and is this something that's going to be short-lived?
I think the biotech sector in particular has had an incredibly good run. So I think if you look over the last 5 years, it's done about 250%. So there's absolutely no doubt when a sector like this has a great run that there's going to be a little bit of a pullback, a little bit of selling pressure. And I think it's absolutely normal. It's a great sector to be in. There's some fantastic companies. I think if you look at analyst recommendations, there's more analyst buy recommendations in this sector than any other sector at the moment. So I think it's the place to be, in a sense. But after having such a good run, there will be a little bit of pressure. Still 9% up for the year, though.
Looking more broadly, Mike, at global conditions, how are you reading things?
Well, I think everyone's cognizant of what's going to be happening with the upcoming earnings season and how things like the stronger dollar are going to start affecting U.S. corporate earnings and perhaps a shift in profitability and earnings out of some of the European exporters. And I think you need to look at it in the context of relatively weaker data that's been coming out of the US firstly. So you can't blame the currency in itself. And I think it's quite important also to look at different types of companies. You can't simply say it's going to have a negative effect across the board for earnings. Companies like McDonald's and Coke clearly have a massive international operation and generate a lot of their revenue from outside of the US. But then they also have a lot of other issues like branding, with consumers moving more towards healthier lifestyles. And in the same breath, you can speak about a company like Apple, which has got over 60% of its operations outside of the US, also a massive non-US dollar generating revenue, and they're still on track to produce good numbers. So yes, the US dollar has an effect, the strong US dollar has an effect, but it doesn't affect all companies equally.
Talking about data points there, the data that we have been getting out of the US, some has been very strong and some has not shot out the lights. We do have quarterly numbers that are expected today in terms of GDP print. What are you expecting from those?
Well, again, if you look at the US numbers, they have generally disappointed as opposed to the European numbers, which have generally surprised to the upside. If you look at something like durable goods orders, those numbers have been declining for the last 5 months. So I think it's a general trend at the moment, and I wouldn't be surprised to see slightly weaker GDP numbers as well.
Mike, looking at Janet Yellen, talking apparently today in San Francisco on monetary policy, and also just thinking yesterday of our own Reserve Bank Governor, Lesetja Kganyago. Unlike chief executives, people take pay a lot of attention to their body language, the words they use. That Janet Yellen's famous phrase of just because we're not using patient anymore doesn't mean to say we're impatient. How are you reading her now that she's well into that role? Have you learnt to read her language?
I think we've moved to a point here where each meeting has to be looked at individually, and yes, the language changes. Even words get looked at and scrutinized, sometimes too much as far as I'm concerned. But I think the Fed has been quite good up until now in giving forward guidance, and whether it's language like that gets used or not, I think the overriding message here is that rates need to stay lower for a little bit longer, and the market a week or two ago took that very positively, and that has absolutely everything to do with feeding back into how the dollar reacts and how US companies react on the back of that. And as your previous guest Michael mentioned, the rand is obviously subject to the moves in the dollar as well.
Yesterday we saw the jobless claims numbers, which surprised to the upside, and next week we have the all-important non-farm payroll numbers. To what extent is this going to strengthen the case for a stronger dollar?
Well, I think the more people are employed, so the better the employment numbers look, the more scope the Fed has got to start increasing rates. And as rates increase, we will see the strength of US dollar increase on the back of that, absolutely.
Well, that's Mike Tonkin. He's portfolio manager at Old Mutual Wealth, talking to us from Cape Town. Thanks, Mike.